Ladies and gentlemen, we welcome you all to ICICI Bank's results conference call with Mr. Sandeep Batra, Executive Director, ICICI Bank, and Mr. Anindya Banerjee, Group Chief Financial Officer, ICICI Bank. Mr. Batra will now give you an overview of the results, which will be followed by a Q&A session. Thank you, and over to you, sir.
Thank you. Good evening, everyone. Thank you all for joining us today. The Indian economy continues to be resilient, supported by a series of structural reforms implemented over the past years and continuing policy measures taken by government and regulators. We continue to remain focused on our long-term strategy aligned with India's evolving economic landscape and growth potential, while being mindful of global risks and volatility. At ICICI Bank, our strategic focus continues to be on growing profit before tax, excluding treasury, through the 360-degree customer-centric approach and by serving opportunities across ecosystems and micro markets. We continue to operate within the framework of our values to strengthen our franchise. Maintaining high standards of governance, deepening coverage, and enhancing capabilities with a focus on simplicity and operational resilience are our key drivers for our risk-calibrated, profitable growth. Our board has today approved the financial results for the bank for the quarter ended December 31st, 2025. I would like to highlight some of the key numbers. First, moving on to the profit and capital. Net interest income increased by 7.7% year-on-year to 21,932 crore rupees in Q3 2026. Net interest margin was 4.3% in Q3 2026 compared to 4.30 in Q2 2026. Fee income grew by 6.3% year-on-year to 6,572 crore rupees in Q3 2026. Operating expenses increased by 13.2% year-on-year to 11,944 crore rupees in Q3 2026. This includes the impact of additional operating expenses of 145 crore rupees on provisions on an estimated basis pursuant to the new labor code. Core operating profit grew by 6% year-on-year to 17,513 crore rupees in Q3 2026. Provisions, excluding provision for tax, were 2,556 crore rupees in Q3 2026. Following its annual supervisory review, RBI has directed the bank to make standard asset provision of 1,283 crore rupees in respect of the portfolio of agriculture priority sector credit facilities, wherein the terms of the facilities were found to be not fully compliant with the regulatory requirements for classification as agriculture priority sector lending. There is no change in asset classification or in terms and conditions applicable to the borrowers or in the repayment behavior of the borrowers as per these terms. The bank has been originating this portfolio since 2012 and will work to bring it in conformity with the regulatory expectations. This additional standard provision will continue until the loans are repaid or renewed in conformity with PSL classification guidelines. Excluding the additional standard asset provision, the total provisions were 1,273 crore rupees in Q3 2026. The profit before tax, excluding treasury, was 14,957 crore rupees in Q3 2026. Profit after tax was 11,318 crore rupees in Q3 2026. Adjusting for additional standard asset provision, the profit before tax, excluding treasury, would have increased by 6.2% in the year to 16,242 crore rupees, and similarly, profit after tax would have increased by 4.1% year-on-year to 12,280 crore rupees in Q3 2026. In December 31, 2024, the bank had a net worth of 3.23 lakh crores, including profit for 9M 2026. CET1 ratio was 16.46% and total capital adequacy ratio was 17.34%. Moving on to deposit growth, the average deposits increased by 8.7% year-on-year to 15,86,088 crore rupees during Q3 2026. Average current and savings account deposits increased by 8.9% year-on-year. The bank continued to see healthy growth in current account deposits and individual term and saving deposits. Total Period-end deposits increased by 9.2% year-on-year to 16,59,611 crore rupees at December 31st, 2025. The bank opened 402 branches in 9M 2026 and had a network of 7,385 branches and 11,983 ATMs and cash recycling machines at December 31, 2025. Moving on to loan growth. The domestic loan portfolio grew by 11.5% year-on-year at December 31st, 2025. The retail loan portfolio grew by 7.2% year-on-year. Including non-fund outstanding, the retail loan portfolio was 42.2% of the total portfolio. The mortgage portfolio grew by 11.1% year-on-year. The business banking portfolio grew by 22.8% year-on-year. Growth in domestic corporate portfolio was 5.6% year-on-year at December 31st, 2025. About 71% of the corporate loan portfolio was rated A- and above at December 31, 2025. Moving on to asset quality. Net NPA ratio was 0.37% at December 31st, 2025 compared to 0.39% at September 30th, 2025. During Q3 2026, there were net additions in gross NPAs of 2,074 crore rupees. Gross NPA additions were 5,356 crore rupees in Q3 2026. Recoveries and upgrades of NPAs, excluding write-offs and sale, were 3,282 crore rupees in Q3 2026. Gross NPAs written off were 2,046 crore rupees in Q3 2026. There was a sale of NPA of 120 crore rupees for cash in the current quarter. The provision ratio on non-performing loans was 75.4% at December 31st, 2025. Total fund-based outstanding to all borrowers under resolution as per various extent regulations was 1,660 crore rupees or about 0.1% of the advances at December 31st, 2025. Loans and non-fund based outstanding to performing corporate borrowers rated BB and below were 3,392 crore rupees at December 31st, 2025 or about 0.2% of advances at December 31st, 2025. The total provisions during Q3 2026 were 2,556 crore rupees or about 14.6% of core operating profit and about 0.1% of average advances. Including the additional standard asset provision, the total provisions were 1,273 crore rupees or 7.3% of core operating profit and 0.36% of average advances. The bank continues to hold contingency provision of 13,100 crore rupees at December 31st, 2025. Customers are at the heart of what we do, and providing them a safe environment is paramount. I would like to share some of the recent initiatives on our customer centricity. Coming to banking with care for senior citizens, to empower senior citizen customers with knowledge and confidence in their daily banking needs, we continue to engage with them through SMS, email, social media videos, and on-ground awareness sessions. In Q3 alone, we conducted over 250 awareness programs in housing societies nationwide, helping them recognize prevalent frauds and safeguards for their accounts. We also provide them convenience of digital banking services, including online submission of a Form 15H, live certificates, and digital interest certificates. Secured banking for customers. The bank has introduced Smart Lock on iMobile, a unique safety feature which empowers customers to lock or unlock access to internet banking, UPI, credit card, and debit card facilities with a single click. This puts convenience and controls directly in the hands of while ensuring stronger protection. In addition, the bank has launched a new domain, www.icici.bank.in, in line with regulatory guidelines. The domain enhances authenticity, safeguards customers from fake websites, and delivers a seamless digital banking experience with added layers of security. To further protect customers from frauds, the bank has begun using 1600 series phones numbers for outbound calls. This initiative helps customers to easily identify genuine communication from the bank and avoid responding to fraudulent calls, thereby reducing the risk of scams. Digital lending enhancements. The existing loan against securities customers can now increase overdraft limits entirely online and pledge shares seamlessly through the bank digital channel. This significantly reduces turnaround time and enhances customer-friendly lending experience. Through these continuous innovations in service quality, digital security, and awareness, we strive to safeguard our customers, promote awareness, and design thoughtful solutions that meet their needs. Going forward, we will continue to operate within our strategic framework while focusing on micro markets and ecosystems. The principles of fair to customer, fair to one bank, one team, and return of capital will guide our operations. We focus on building a culture where every employee in the bank serves customers with humility and upholds the values of brand ICICI. We aim to be the trusted financial service provider of choice for our customers and delivers sustainable returns to our shareholders. With this, I conclude my opening remarks. I'll be happy to take your questions. Thank you.
Thank you very much, sir. We will now begin the Q&A session with Mr. Batra and Mr. Banerjee. Anyone who wishes to ask a question may press star and 1 on the telephone. If you wish to remove yourself from the question queue, you may press star and 2. Today's announcement is on the bank's financial performance. Hence, we would like to request you to ask questions related to that. Please write to the corporate communications team separately for any other queries. Due to time constraints, I request all of you to ask 2 questions at a time. If you have additional queries, you may join the queue again if time permits. Thank you. We'll take our first question from Ritu Singh from CNBC TV 18. Please go ahead.
Hi, thank you very much for taking our question. Mr. Batra, first, that additional provision that you've had to make, RBI directing the bank to make a 1283 crore provision for the agriculture portfolio, where some of the facilities were found to be non-compliant with the PSL classification norms. Could you first, just simply explain what the bank was doing and what RBI required them to do differently? What prompted, this kind of a change? And secondly, are you re-looking at this portfolio? Is it a one-time thing, or do you think there could be additional provisions you would have had to make, as you go through this? Secondly, if you could also explain to us, Mr. Bakshi getting a 2-year extension, it was long awaited by the street, but why specifically only the 2-year term? Typically, we've seen the bank, go with 3-year terms. So that's one question. And if you could clarify your slippages, there's a seasonality factor and agriculture slippages that, the bank typically sees in the third quarter. What else has led to the contribution to, this 56 crore gross slippage number? Where it's come from, and any pockets of stress you may want to call out, specifically with MSME, for instance, with any US tariff threat or the unsecured book, what are the trends you're seeing? Thank you.
Okay, so that is 4 questions, so let me still try to take all of them. First of all, RBI, as you are aware, does an annual inspection as part of the cycle. We have been doing this portfolio since 2012, and RBI has made an assessment that the terms of the facilities were not fully in compliance with the regulatory requirement for PSL. All right. I also want to categorically state there is no change of asset classification or in terms and conditions applicable to the borrowers or in repayment behavior of the borrower as per these terms. So we are very comfortable for the quality of the book that we have done. We will work towards repayment and renewal of these loans to make them in conformity with the PSL guidelines, and our endeavor would be to minimize the PSL and provisioning impact. Okay. Coming on to Mr. Bakshi's reappointment, I think there was a discussion with the board along with the MD, and it was felt appropriate that a 2-year term is what it is. But just wanted to clarify, it is nearly 3 years from today. It is starting from October of 26 and goes on till October 28. So it's nearly 3 years. The other was around slippages.
Gross slippages.
The gross slippages are actually fine. Sorry, there was something around business banking. I think our business banking portfolio continues to do well, and we have grown that portfolio by about 22% during the quarter. In terms of slippages, I think if you see the numbers, they have actually gone down compared to Q3 of 2025. The gross additions in the current quarter were 5,356 crore rupees as against 6,085 crore rupees. In fact, the recoveries are largely at a similar level. It was 3,392 crore rupees in Q3 of 2025. Now they are 3,282 crore rupees. So the net additions in this quarter is about 2,074 crore rupees as against 2,693 crore rupees. If you're comparing with Q2 of 2026, that's the seasonal impact of rural slippages. Beyond that, I think we are very happy with the numbers over here.
But Mr. Batra, the question was more also, whether you have evaluated your MSME book, what kind of exposure they have to the US there, because it's the tariff issue, if there could be any stress, and unsecured, what you're saying, and also, to what you responded on the agriculture PSL provision. Just to clarify again, this is a one-time activity. You do not expect any further provisions that the bank will have had to make on this portfolio?
On this portfolio, this was an exercise done for the period ended March 2025. RBI does annual exercises. For this period, we have made an assessment, and I've already made my comments relating to that. On business banking, the portfolio continues to do well. We are very happy with the quality of the book that we have done, and we have grown that book thing. We continue to assess our portfolio. As you are aware, India is largely a domestically focused economy, and we made an assessment of the impact of US tariffs. And of course, when we are assessing our customers, we prioritize resilience through strong balance sheet from a customer perspective, and we continue to leverage these. We continue to believe that the quality of book that we have built is very comfortable. I think the impact of US tariffs is sorry.
Yeah.
Sorry, go ahead.
No, please go ahead, and if you could also add, because of ECL as well, have you made an assessment of the additional provision you will have to make?
ECL is still an internal assessment. Whenever the regulations come into place, we will be compliant with that. So that is something in the future,
sure.
Right? Okay. Thank you, Ritu.
Thank you. We'll take our next question from Vishwanath Nair from NDTV Profit. Please go ahead.
Hi, Mr. Batra. Just following up on what Ritu was pointing out about the provision factor as well. Is your 4% dip on the net profit largely because of this one-time hit? And again, is there an expected hit that is going to follow in the fourth quarter? That's question number one. Question number two, I want to take that question about the CEO forward. See, the reason we are asking that is because 3 years is what one is usually used to whenever the board recommends a term for a CEO's extension. So 2 years seems like we're preparing the system for a potential change. So is that something that we should watch out for at all? Thank you.
So the board, in its wisdom, in discussion with the managing director, decided it's the 2 years, and I just wanted to clarify again. His term it's an extension from October of 2026, so it is nearly 3 years at this point of time. Right? So we have informed the market well in advance. And secondly, in terms of this, I thought I'll just clarify, in case of the specific provision was not there, instead of a minus 4%, we would have had a plus 4.1%. On PAT.
I understand that. Okay. Yes. The quick question also is on the net interest margin front. Now, NIM has more or less stabilized around this 4.2, 4.3 level. But the impact of the December rate cut is likely to flow in again during the current quarter. Do you expect any moderation going ahead?
Now, looking at we do expect NIMs to remain more or less range-bound, reflecting the repricing of the external benchmarks on loans and investments, as you rightly pointed out, and of course, competition intensity. This would get in part be, offset by retail term repricing. And we will continue to watch the market conditions, and if there are any further changes in monetary policy, that will impact the NIM trajectory. From our perspective, we are focused on maximizing all levers of profits, and where NIM is certainly one of the important levers.
Sorry, just to close this off, 11.5% is still close to the system on the advances growth. Is this the level that you're expecting for this financial year, or because that growth has been a question for ICICI Bank?
No, I think you have to look at the overall franchise the way it has been growing. We do believe that our recent policy is supportive. We do believe that we will continue to evaluate customers. We do not give any specific targets of what we are going to be growing. Our focus is to maximize PBT in a risk-calibrated fashion, and that is what we will continue to be doing.
Thank you.
Thank you. Next question is from Shayan Ghosh from Mint. Please go ahead.
Just give me a second. Shayan, just give me a second.
All right.
Yes. Sorry, Shayan, go ahead.
Hi, Mr. Batra. Two questions. One is, what is the size of this portfolio that RBI has said it's not fully compliant, and was it some sort of a misclassification? Because you said it's been there since 2012. Did RBI find that the classification that you have made is not what it would like it to be? The first one. Second is, on the 2-year term, I know you have answered, but is it because Mr. Bakshi doesn't want a full term? Because under regulation he still has up to 70. So why the 2-year term is what we were wondering. I know you said 3 years, but
I will repeat what I said. The board, in its wisdom, decided, in consultation with the managing director, decided to give a 2-year term. Right. Moving to the point about the size of the portfolio, the standard asset provisions, the total portfolio required to be reviewed from an agriculture priority sector lending was in the region of about 25,000 crores. And the bank has been originating this portfolio, as I said, since 2012. And we will work towards bringing this in conformity with the regulatory expectations. I repeat, these loans are standard and secured in nature. And the standard asset provisions will continue until the assets are repaid or renewed in conformity with the PSL guidelines. So, there is, from a customer angle, we are very happy. As you are aware, the provisioning requirement for a PSL agri portfolio is slightly different from normal. It is about classification thereof. It does not in any way reflect the quality of the borrower.
All right. And because you have been, on this portfolio for 13, 14 years, has it ever been pointed out earlier, or because something changed in FY25? Is what I'm trying to understand.
Sean, and I think this is an annual exercise which RBI does, and the discussions with them are confidential. As I said, we have been, this portfolio, we have been having it for a very long period of time, and we are happy with the quality of the book.
Okay. All right. Thanks.
Thank you. Next question is from the line of Priyasmita Datta from the Informist. Please go ahead.
Hello.
Yes, we can hear you. Please go ahead.
Yeah, hi. Thank you for the opportunity. My question is with regards to the treasury loss of 157 crore that we saw in the December quarter. I just wanted to know what can we expect from the treasury income head in Q4, and if you can give your view on how you see it progressing in FY27, given the rate view in keeping the review in mind. And secondly, I just wanted to understand one thing. I may have missed it when it was mentioned before. That for how long do you have to hold this additional provisions? Thank you.
First on the treasury, I think the treasury loss of about 157 crores against a gain of about 220 crores in the Q2 of current year. This is primarily reflecting of mark-to-market movements. Going forward, we will see, and I think you'll also have to see these numbers in the context of the NIM that we earn. So we normally don't choose to book gains, and we look at economic returns over a longer period of time rather than booking gains from an accounting point of view. The second question was again on, as this is a standard asset provisions, and if, as I said earlier, we will continue to work towards repayment and renewal of these loans in conformity with the PSL classification guidelines. And our endeavor would be to minimize the PSL and provisioning impact.
Priyasmita, does that answer your question?
Yeah, thank you.
Thank you. Next question is from Subrata Panda from Business Standard. Please go ahead.
Hi. Thank you for taking my question. My question is again on Mr. Bakshi's reappointment. Are we to understand this is Mr. Bakshi's last term as the MD of ICICI Bank? And if so, has the bank formed a committee to look at internal candidates or external candidates for his successor?
Listen, so this is 3 years away. I mean, the bank has got, we are 3 years away. All right. I've already answered this question. And there's no further comments on this.
No, we understand that what you have said, but just as that we need a bit more clarity as to if the bank is looking for a successor.
This is the maximum clarity I can provide at this point of time. We are very clear. The bank has got enough strength at this point of time, and there has been there is enough continuity from that perspective.
I think maybe just to add, as Sandeep mentioned, his present term itself is till October, and this is a 2-year term on top of that, which takes it to almost 3 years from now. And that's there's no need to speculate so far into the future.
Understood. Thank you.
Thank you. Next question is from Joel Rebello from Economic Times. Please go ahead.
Sir, just wanted to clarify. Can you hear me clearly?
Yes, Joel.
Please go ahead.
Yes. Sir, just want to clarify, if you cure whatever the infirmities in this agriculture portfolio, will you be able to write back the provisions, or how does it work? I just wanted to understand that.
No, which is, as I already mentioned, we would be working towards repayment or renewal of these loans to make them in conformity with PSL classifications. And our endeavor, as I said, is to minimize the impact of this provision.
So, which means that if it is in conformity, you can write back the provisions later. Is that
yes?
Is my understanding?
Yes.
Yeah. Okay. The second question is on the terms of margins, sir. You all are one of the few banks who have been able to maintain your margins. It's better than last year, and I think the same level as the previous quarter. What's behind this? Is it that you all have been able to manage your cost of funds better? Can you give us some perspective?
No, we have a disciplined approach on this, Joel, as you've been. We focus on averages. We focus on working with customers. I think that's overall part of our overall strategy. I do believe our digital offerings also help, and we grow our book in a fairly disciplined manner. And I think that strategy has been working for us very well. And incidentally, internally, we drive PBT as a metric, cost meeting the customer needs and ensuring the customer service is of the highest order. Within that framework, we look at more as long-term economic relationships, and accounting becomes less important in the overall scheme of things. And there are multiple factors over here trying to have a more efficient treasury, having a product mix which meets both the customer requirements, and also having a risk-calibrated approach. We have been doing this for some time, and we will continue to be on this path.
Sir, one question on corporate banking. Retail has been the growth engines for banks for many months now. What's the outlook on the corporate side, sir? What are you all seeing on the corporate side?
There's been a bit of an increase on the corporate side in the current quarter. But I think this also reflects the overall, as you are aware, there has been some sequential pickup. We focus on corporate clients, and if you are aware, corporate clients have got multiple options, including getting money from equity, and they also have a very healthy internal accrual to fund their expansions. We work with them on a 360 basis, and from our point of view, we do not target any particular mix. And wherever we are able to get opportunities, we are happy to grow. If you see, we have been growing our business banking group book, which is also, in a way, includes small and medium corporates to that angle. That book, during the current quarter itself, has grown by about 2.8%. The retail book has been growing well. And as you rightly pointed out, we have had a increase of 5.6% on the domestic corporate side. So that wherever we get opportunities in a risk-calibrated basis and it meets our profitability thresholds, we are happy to lend.
Thank you, sir. All the very best. Thank you.
Thank you. Next question is from Ira Dugal from Reuters. Please go ahead.
Mr. Batra, sorry to dwell on this, but your comments are just not clear on this priority sector loan. Firstly, just repeat the size of the loan portfolio where there is misclassification. The numbers are really large, and it would be a significant share of your outstanding agriculture portfolio. If you could share that. I have a follow-up question on that, but first I just want to make sure we all have the numbers right.
No, we shared the numbers. No, I think I...
So what did you say? Can you just repeat that number? The size of the loan book.
The size of the loan book was about 20,000 to 25,000 crores approximately. We're not getting into that. RBI asked us
that
to
would
make...
be a significant share of your agriculture book, right? Because your rural loans are how much? About 3 times, a little bit more than that, maybe?
It is what it is, no? I mean, it is the rural book is, and rural book is about 83,000 crores. So, yes.
That's a significant amount. Then, I mean, the way you're...
Yeah, sorry. So we have been doing this since 2012, and we have made these provisions, and I again repeat, I mean, I think it's important to note that there is no change in the
standard assets. We completely understood
these
that.
Are standard assets. The bank is fine. Yeah.
I understand that absolutely, but what is not clear is the way you're framing it, that this is the provision for this period or the period the RBI assessed. So it's not clear to me that you have made all the provisions required on this entire 20 to 25,000 crore book which is not being classified accurately, or will more follow.
So the provisioning amount of 12.83 billion is as directed by Reserve Bank, and that is the provision we have made in this quarter.
Not for this year, on the entire portfolio going back to whatever is existing on you. So this is fully outstanding.
We have the provisioning amount is as directed by Reserve Bank. As we have said quite clearly, as following its supervisory review, the regulator has directed that this provision be made, which we have made.
Okay. Anything you can tell us on what these loans were that, so far back, more than 10 years, it's been, you said you've been doing this business since then, so it suggests that it's been misclassified since then? This seems like a really long period, and it's difficult to understand why it wouldn't have been caught earlier and corrected.
Ira, we've got no further comments on this.
Okay, sure.
Thank you. We'll take our next question from Hamsini Karthik from Money Control. Please go ahead. Hamsini?
Hi. Yeah, I'm here. Hi. You can hear me? Am I audible?
Yes.
Yeah, thank you. I'm going to ask a question which would possibly sit a little polite with you first and then press on a point which has been spoken about earlier. You've added another 500 crore of equity into ICICI Home Finance this quarter. That makes it the second infusion possibly into the subsidiary in the last 2 years. Just wanted to understand what is the rationale for the infusion. How is the health of ICICI Home Finance? It did have a bit of an NPA related issue. Where do we stand on that? And I'll go with my next question, sir.
No, I think ICICI Home Finance has been doing exceedingly well. And we are happy to infuse capital to meet the regulatory requirement and expansion that is required from their business point of view. So it's an important subsidiary. They have improved their NPA provisions, and just to maintain a healthy capital adequacy ratio over there, we are happy. And this takes into account that we will be investing, we'll continue to invest in this business. So that is fine. So that's okay. Whenever they will need capital, capital, we'll be happy to support them. No?
Okay.
So the business is profitable, and they have substantially addressed the NPA issue, which was there in the past.
Okay. So even if adjusted for the RBI-led provisioning, PAT growth at 4%, as you mentioned earlier, is for a very long time we're seeing ICICI come out with single-digit PAT growth. Is size catching up with you all? Are you comfortable with this pace of growth, sir? It's been oscillating between 4 and 9%, very good quarter, 10%. Are you happy with these numbers internally?
Of course, we can do much better. I mean, I hope we do much better. So to that extent, we are never happy with the results that we give. We would like to be, we would like to do more. And of course, this year's growth has to be structurally seen in the context of, RBI reprice. The monetary policy which has taken place, as you are aware, over the last year or so. The repo rate has been cut by 125%, and a very large book is linked to external benchmarks. So that does. I think we have guided this almost a year back, that whenever the interest rate cycle changes, which has changed over a year point of view, there would be an impact, which is sort of playing around. Once this settles in, we should be back to a more better growth of profits. But as I said, we are focused on ensuring, one, we have a customer-centric approach. Two, ensuring that we are fair to our customers as part of that, and fair to the bank. And within that framework, we will grow our profits. So it has to be on a risk-calibrated basis. The strategy, I'm probably repeating this for the nth time, the strategy is working with us. And to your short answer, can we do better? We can obviously always do better.
And maybe if I could just add that, we primarily focus on the operating numbers and related outcomes. So if you look at, for example, the current quarter, the growth is without, or, we have not been booking significant treasury gains. So the PAT is really an outcome of the operating, performance of the bank. Similarly, we continue to hold, significant additional provisions on the balance sheet. Even apart from what has been mandated this quarter, we hold about 131 billion rupees of contingency provisions. So I think the earnings growth is a reflection of the operating performance without being too market in capital market or fixed income market dependent, and also while maintaining an extremely strong balance sheet.
Lovely. A last question, sir.
I just want to complete this. We've got a healthy ROA. I mean, it's over 2%. I mean, if I adjust it, even if I adjust it for this, after adjusting for this, we are going to report 2.11%. And an ROA of, taking off this one-off, it will move to about 2.29%. It's a very, very, very healthy number, and with a healthy ROA as well.
2.29. So on the CEO appointment, to one of the questions, Mr. Batra's response was that the board, in consultation with Mr. Bakshi, felt that it would be appropriate to give a 2-year tenure, or felt appropriate that a 2-year term would be good. Was this decision also taken to ensure that the second level of leaders are also given the opportunity to rise up? What was the thought process, sir?
We have already shared whatever we needed to share. I do not have any more comments to give on this.
Thank you. Next question is from Ben from New Indian Express. Please go ahead.
No, I'm talking to Krishnan. Thank you.
Thank you. We'll take our next question from the line of Harsh Saita from ET Now. Please go ahead.
Yeah, hi. Thank you. Just wanting to understand and maybe delve in further. What's the duration of the agri PSL book?
It's a reward. These are, largely in the nature of, working capital limits. So these are not, term loans in that.
Understood. And they're fully secured, I hear.
Yes.
Perfect. And does anything change? So I gather from you that you all are completely comfortable with the way the book is behaving otherwise. I'm trying to understand whether anything changes for you in terms of recognition, even from an ECL or from a conservativeness standpoint. Do you all at all change the way you all recognize the provisioning, maybe trying to be more conservative going forward in this book with regard to this book?
No. Okay. One, from a conservative point of view, our provisioning norms are slightly tighter than what RBI prescribes. We also hold large contingency provisions of 13,100 crores, which we have talked about. As far as this is concerned, this provision is coming because the provision requirement for this category is different from normal. Based on the revised understanding with RBI, they treated this as normal and accordingly additional provision was made. As I said, it doesn't affect the asset classification at all.
Yeah, I fully gather that. Again, I'm sorry if I'm trying to I'm not trying to understand your conversations with the RBI. I'm trying to understand anything, the way y'all recognize provisioning in this book changes for you going forward. I don't think so. Based on whatever y'all are saying.
As long as it is a PSL book, it will get classified in a certain fashion. If it is a non-PSL book, PSL in this category, it will get classified as certain other fashion. That's about the only thing. We are very much in compliance with the regulatory requirement in both the cases.
Perfect. Thank you so much. Very helpful.
Thank you.
Thank you.
Next question is from Ashish Agashe from PTI. Please go ahead.
Thank you so much, sir. Hope I'm audible. Hello.
Yes, Ashish.
Sir, just a small bit on this PSL front. So, does it change anything on your PSL commitment? Because ultimately,
not at all.
Strongly classified.
Not in the least manner. We will continue to work to meeting our PSL requirements, and wherever there is a need, and in fact, the rural economy is doing well, and there are opportunities there, we will continue to pursue them.
Okay. And sir, will there be, because you are carrying a bit of book ahead as well, so and there would be right classification from here on. So would there be more provisioning to do for the agri book here on, sir? This is not about the past assets, but in the future as well.
No, the additional provisions will continue until the loans are repaid or renewed in conformity with the PSL classification guidelines. And this is what I mentioned. And we will work towards the same. And based on our current assessments, we do not see any major incremental provisions going forward.
Okay, sir. And the second question is based a bit on the perception, sir, and especially given whatever has been happening in the banking sector in the past, especially got to do with private sector leadership appointments. Was there a consideration that, okay, let us have the 3-year appointment in mind so that we convey the right message rather than leading to a lot of other questions by restricting it to 2 years, sir?
I've got no further comments on what I've already said. This is Mr. Bakshi has been, was appointed in 2018. It's been sufficiently long period of time. We are, as I did mention, the board in consultation with him has made a decision and which we have conveyed to the exchange and yourself.
Okay, sir. Thank you so much.
Thank you. We'll take our next question from Ram Kumar from Hindu Business Line. Please go ahead.
Hello. Hello.
Yes, we can hear you. Please go ahead.
Yeah. I just wanted to understand PSL loans that for which you have made standard asset provisioning, were they originated by the bank or they have been direct assignment or PTCs or co-lending model actually? How did you get these loans actually on board?
These would have been direct origination.
Direct origination by the bank. Okay. Yeah. Okay. All of it.
Yeah, pretty much I would think, yeah.
Okay. And sir, coming to this point about this gap between deposit growth and credit growth still persists actually. And in your case, it is over 200 basis points. So what are you doing to manage this gap actually, to bridge this gap? Yeah.
In the current quarter, as you are aware, there was a reduction in the CRR requirement. So you would have seen, the credit deposit ratio go up, across the system and for most banks for whom numbers are available, barring maybe one or two. So that's a very natural thing to happen. From our perspective, I think we are very comfortably funded, with very healthy retail deposit growth. So we don't have any concerns on that account.
Okay. And this 15% odd capital adequacy ratio that you have, is it good enough to support further growth in loans actually, or you'll have to hit the market again actually for raising capital?
No, this is very much adequate.
Actually, including profits for the quarter, we are at a total capital adequacy of about 17.3, which is including profits for April to December. We are at a total capital adequacy of 17.3, which is very comfortable.
Yeah. Thank you so much, sir.
Thank you. Next question is from Falagna Sayed from Deccan Chronicle. Please go ahead.
So, have you acquired the pension fund business from your subsidiary? So,
yes, we have.
So, what is the idea and what is the strategy, plan of action for that business? Why did you, because it was already, it was a subsidiary of your subsidiary. So, what was the idea behind doing it?
No, it was a step down of our subsidiaries. I mean, we explained this, I think, about 2 quarters back when we made the decision. We do believe that the synergy with the bank it will be better, and the business will be able to expand in a much better fashion. So this is essentially about synergizing with the banking set of customers, and which we hope to achieve in the coming quarters and years.
Thank you.
Thank you.
Thank you very much for being with us on a Saturday afternoon.
This brings the conference call to an end. On behalf of ICICI Bank, we thank you all for joining us. You may now disconnect your lines. Thank you again.